Should you trade just one currency pair or stock, or should you trade many currency pairs or many stocks, depending on if you're a Forex trader or stock trader? Well, in today's video, I'm going to talk to you guys about focusing on one market compared to trading many markets and some of the pros and cons of each, because you're going to get different opinions. So I'm going to share with you guys my opinion and give you some of the pros and cons objectively so that you can make your own decision. Stay tuned. Let's get into it right now. Hey guys, welcome back to the channel. My name is Nick. I talk all about trading and investing in stocks and in currencies. And today we're going to talk about a question, like I said, that I got, which I thought was really good. Should you trade many pairs, many stocks, or should you trade one pair or one stock? And I think that there are definitely some good and bad points for both arguments, but you're going to get a whole mix of confusion on the internet when you ask this question. So I'm going to give you guys hopefully a more unbiased answer. Now, for me personally, I will just go ahead and state that I do trade like a basket of currency pairs and stocks. I'm not really an active trader when it comes to stocks, but when it comes to currencies, I'm more active, and I'm more of an investor when it comes to the stock market. So when I'm looking at a currency pair, for example, it's usually, I like to stick to markets that are highly liquid because the spreads can be quite a lot. For example, I'm just going to say this. If you were to trade Euro USD over and over and over compared to trading something like Aussie Canadian, the spread on Euro USD is much tighter, and so you're actually going to spend less money to your broker with that sort of spread. So there's a pro and con to all different sorts of markets. Now, somebody might say, well, the Euro USD doesn't move a whole lot sometimes, so there's not really much volatility for me to capture anything, so maybe I don't want to trade Euro dollar. Again, going to come down to your preference and what you like to trade. However, let's talk about some of the pros of trading just one currency or currency pair or stock if you're a stock trader. The big thing here is that if you trade one thing, the obvious pro is that you're going to get very familiar with trading that particular market. And so that can be a really good thing, because if you get really, really used to it. For example, I know right now I've been trading Euro dollar a lot this week. I know that Euro dollar is breaking out and it's quite trendy right now, though the last month or so, it's been very, very range bound. So knowing the market environment that you're in and focusing very hard on just one particular market can be a good, it can make you very, very focused and very, very refined in trading that one particular instrument. I know, for example, a lot of people like things like Euro dollar, pound yen, these currency pairs, because they are highly liquid. When you're looking at the stock side of things, people like to trade on an intraday level things like Apple, Tesla, Amazon, those stocks that have a lot of attention, a lot of liquidity, and in some cases a lot of volatility. Okay, so when you're picking something, if you want to trade just one thing, the counterpart to that, the con to focusing on one market, is that you're naturally going to get a lot less opportunities if you're just looking at one chart, right? If I was looking at Apple stock every day looking for breakouts and we just consolidated for 6 months, I would have very, very few trades. As opposed to if I was looking at Apple and Amazon and Disney and Walmart, if I was looking at all these different stocks to trade, there might be more breakouts to consider that are popping up on my radar. And because I'm limiting to myself to just one currency pair or stock, I might miss out on some of the other markets that are available. So that is one of the counterparts there when it comes to that. Now, again, like I said, some of the other pros for trading these higher liquid markets, if you just isolate yourself to trading just Apple stock or just Euro USD, you're going to get some very, very tight spreads because of how liquid and how heavily traded those particular markets actually are. So that's another pro, is you get a lot tighter. Now let's actually talk about some of the pros really quick of trading many currency pairs or many stocks, or opening up your horizons when it comes to the markets that you are trading. So when it actually comes down to it, having more trade ideas is not necessarily a good or bad thing, because there are plenty of people who are still struggling to figure this stuff out or even get a strategy behind them, and many opportunities doesn't mean anything to them because they're just taking many, many losses, or they just don't know what they're doing, they're over leveraging, and they're just making that sort of mistake. That, to me, is definitely something that is a danger. But the flip side to that is that if you do know what you're doing, if you have built consistency, if you've started to develop a strategy and a plan that suits you and fits you well, it may be applicable to more than one market, and that's where for me things kind of come together, because I have a strategy that works for me on multiple currencies. For example, for my more active trading, I really like things like euro dollar, dollar Canadian, AUD USD, dollar yen, pound yen, New Zealand dollar, right? It's actually a pretty I like to trade a lot of the US dollar pairs, as you can probably imagine. That's for me a big market that is pretty globally impacting, and so the US dollar can move all these other currencies relatively interesting, like all at the same time, or sometimes one is moving and the others are not. It opens my trade ideas up to a little bit more opportunities, and so that to me is important, but it doesn't, more opportunities is not necessarily good if you don't have a strategy. But it is a good thing to see more opportunities if they truly fit your setups by opening up your horizons in markets that you can trade. Again, if I'm just trading euro dollar, I took one trade this week on euro dollar, and that would have been the only trade for the week. But because I trade more markets, there were some other setups that I liked than that I was looking at. You guys probably, or may have seen if you're watching up to date at the time of making this, the euro dollar videos that I've been putting out, and I've been just kind of catching a trend there, because a lot of what I do is trend following base, and so I've just been able to capture that trend. So there's trends on many different charts. It's a question of how many do you want to open yourself up to. Again, very important to distinguish though that a new trader, in my opinion, probably should focus in on a more select number, or even just one currency pair or stock, because learning just to get in the weeds with one particular market will allow you to kind of figure out how this particular market works. For example, Tesla for the last year has been one of these breakout machines. Every time it breaks a significant level, I'm not actively trading it, but I'm an investor in Tesla. For example, that market, I've just been looking at it from a trading perspective. It just keeps breaking and closing above and holding the breakouts that it makes. That's a pattern that you can recognize by focusing in on one particular market. So that's applicable to currencies, to cryptocurrencies. People make the argument, oh, stocks are better, currencies are better, Bitcoin is better. There's not really a better market. The better comes from you figuring out concepts that are working, applying them while they're working, and stopping them when they're not. Letting trades do big things for you, like letting your winners run, stopping out your losers. These things are ultimately going to be more important than anything else. But for me, I would say that as a newer trader, it's probably better to stick to 1 to 2 to 3 currency pairs or stocks or markets to trade. And as you get more experience, you can slowly familiarize yourself with more markets that you're trading. However, I'm going to say one last thing on that. If you trade many currencies, but you haven't taken any time to back test each one in particular and spend time with each one, you have to know that each currency pair, each stock, each cryptocurrency has its own unique personality. The way you talk to your mom might not work the same way that you talk to your girlfriend or boyfriend, right? You have to think about each market has its own personality. I love using that analogy because I find it so funny. These markets are like, for example, Frank and I talked about the S&P 500 6 months ago and called it like a drama queen market. And that was the personality of that market. It was like, screaming up and then screaming back down. It was just highs and lows. You have to evaluate these things on a one-by-one basis when looking at markets, rather than just jumping in and say, oh, well, this looks good here, because what works on one market may not necessarily work on others. So you have to be open-minded to the idea that different things work for different places. Thanks, guys, for watching. I hope this was helpful to you, and if you stayed to the end, I really do appreciate it. Make sure to subscribe for more free trading content here on YouTube, and we'll see you back in the next video.